Next, we have investment restart. What will the M&A landscape look like in 2025? This is a panel with Shum Singh from Agnitio Capital, Nick Button-Brown from Various, Todd Rosoff from the Raine Group, Caglar Eger from exmox, and Kadri Harma from SMTM.
So I guess we're the last panel for the session, so we'll try to be as engaged as possible. I think we're going to leave about 5 minutes for Q&A, so we're going to have to be quick, guys. I don't know if we'll be able to get through all the themes, so we'll be quick, and I might cut you off and just dive into the next question, because we do want to get maybe some audience participation. So really quick, I'm Shum Singh, founder and MD of Agnitio Capital. I've been coming to this event since its inception. Love it, local. So I'm not going to say too much about myself. If you want to, please come and have a chat with me. We're an investment bank, have advised on a lot of deals, love founders, love the game, have invested a lot in the industry. I'm going to ask all of the panelists to introduce themselves, but before I do, I want to dive right into the first question and get some insights. So last year was a tough year, let's be honest. It was an interesting year. It was a restructuring year, but there's some interesting transactions that were happening towards the end of last year. In particular, the acquisitions of Plarium and EasyBrain, which again were large transactions, but it just, I think, hopefully created some more renewed interest into the sector. I think the big question on everybody's mind is, will that translate into further activity in the small to medium-sized segment, which I would imagine most of the audience members are probably a part of. So I'll turn over to my panelists, and Todd, since you're in the closest to me, I'll put you on the spot. And please introduce yourself.
Yeah, hey everyone, Todd Rosoff. I'm a partner at Raine. We're set up a little interestingly. We're a merchant bank, which is kind of a fancy word for we both advise and invest. Gaming is like a power alley for us, has been for probably 20 years of doing games deals. We talk about this one a lot. I mean, I expect overall M&A activity in 2025 to be more active across really all deal sizes, small to large. Certainly, I don't know if you guys caught Josh's comments before. Like, believe me, like the show me the money theme, like investors, certainly bankers, want to see the money every bit as much as you guys do. And buyers are sitting on just an absolute like hoard of cash, right? So like if I think about how we exited 2024, you mentioned EasyBrain, Plarium, I'd add Superplay on that. Like those deals kind of hit three, each kind of its own kind of powerful motivation that buyers have. Like Superplay, in the case of growth, you think about Playtika, existing portfolios, organic growth has just not been there. You got to find it. M&A is a vector to kind of do that. If you think about EasyBrain portfolio diversification, both IAA as well as IAP, so it doesn't have to mean genre, it can mean kind of monetization model too. And then Plarium, kind of EBITDA scale, right? Particularly important for the buyer in that case. So if I think about the small and mid-sized studios, you guys probably play more into the first two, that kind of growth imperative and also the kind of portfolio diversification, and you guys bring the creativity, really the innovation in the industry. So I think that's critically important. And mid-sized kind of M&A happens to be probably the widest potential set of buyers. So it kind of sets up well to have kind of the most transaction volume.
Yeah. Does anybody else want to kind of pick up on that point? Because I'm just conscious of the time, and I do want to get to some of these other themes. So,
okay.
Please.
First of all, I'm Caglar. Quick intro. I don't know. This is the 10th, 15th panel. I'm together with Shum. So
you just like me.
And I used to work for Good Games Stillfront for quite some time. Then part of exmox. We sold exmox, I think, almost 3 years ago to Ionic Group. And with Ionic Group, we are very active in M&A. And just quickly on that topic, I also think this year we will definitely see more and more transactions. And last year and the year before, I think one of the main reasons why we didn't see that much transactions was that the expectation of the founders were crazy high from the days of COVID. So now everyone is getting more and more realistic. So that's why the investors are really happy to invest. And so I think this year we'll see definitely a lot more activity there.
Yeah, I'm looking at Kadri and Nick. Do you guys want to expand on that, or do you want to maybe dovetail into, and I know, Todd, you mentioned Playtika, right? And, you know, obviously there's different sets of buyers who are going to be attracted to different sizes of companies, right? Do you guys maybe want to talk? And I know, Nick, you're certainly involved in a couple of interesting projects that I know you can talk about. And Kadri, please, any views you might have on Asia?
Well, I mean, hi, I'm Kadri, Sisu Ventures, so maybe not on the end of the spectrum where these guys are, but more looking at early stage. But obviously, all the companies that we invest in want to be acquired at one point, so looking at it at a little bit more of a different angle. But I just wanted to also bring optimism with the fact that all the obvious large targets are already acquired, more or less, so more money for the small and medium size, right? So I think that is also a very big point to look at and understand that acquisitions are still going to be made and there's less targets, so means you can do more smaller targets. Matt.
Hi, I'm Nick Button-Brown. I've been in games for 30 years. I have a Games Angels group, but I'm also involved in a few other companies, which is why my company name was Various on this. I was like, yeah, I work for Various. I'm particularly looking at the moment kind of private equity. I'm seeing a lot of non-gaming private equity expressing interest in gaming. Now, they're still struggling to get over the line a little. So there's some that, once they've made the first one...
A little? I'm not sure that's appropriate.
Once they've made the first one, then they're off. They kind of got it. And there's quite a few others that are looking for that first one. And as soon as they make it, then I think, then they'll buy 5. But yeah, I feel that there's a lot of movement in private equity, small. So in answer to your first question, that's in the small to mid-size range as well. So that drives the earlier purchases, not just the bigger purchases.
What about, and again, just on this kind of buyer universe topic, you know, and again, thank you for those comments, but do you see perhaps non-gaming or maybe tech companies, you know, entering into the market? They're seeing valuations are pretty attractive now. Do you see some of these newer entrants possibly coming in, acquiring maybe a studio and then perhaps using that as a vehicle to acquire others?
That's a tremendous policy. I look at my LinkedIn post. Yeah, there's plenty, and that's why they need the first one to kind of get in, build confidence, and actually then you're taking the management team from the first one to manage the second, the third, the fourth one, and you're trying to kind of roll them up. Yeah, that's absolutely the kind of the best way forward. And
Todd, you mentioned there's really, you know, hordes of cash, if I'm not mistaken, right? That was, I still have my hearing. So, hordes of cash. Where are these hordes of cash, Todd?
Yeah, I mean, look, I'm seriously, it's definitely not in my pockets, believe me. No, I mean, it's kind of like the challenger group, right? Like, I look at a New York Times, more than half their engagement is driven now by games. I look at businesses like Duolingo, which trade really well, have cash, right? That, you know, it's not a bridge too far to see like extensions of their core brand, of their core audience. I mean, certainly everybody talks about kind of the traditional media guys, you know, some more capable than others, but like they've got IP. You know, games has been a blind spot for them for a while, so I put them into the mix. And then there's kind of the guys we've all focused on for a while, Amazon, Netflix, et cetera. So, no shortage of cash with any of those.
I mean, there's a lot of companies in process at the moment, and I just want to go back to the point you made earlier. The difference now is valuation.
Right.
So it's gone from last year, people were expecting 20, 25 times their profitability. Now, what's coming out is 8 to 9. and sometimes people go, ooh, maybe we can push it up to 10 to 11. But that's a very different proposition. And then the investment companies, there is upside there. There is a chance for them to build a return, whereas when it was 25 to 30, there wasn't a chance.
And I'm just going to pick up on that point, because that's a nice segue, Nick, into valuation and perhaps size of transaction. I'm looking at Caglar, because you haven't spoken in a bit, so I'm going to put you on the spot. What do you, maybe you can tell a little bit about Ionic and what you guys are looking for, because that could be directly relevant for some people in the audience.
Ionic, right now our focus, since exmox is in the rewarded space, and maybe you guys saw that there are a lot of rewarded UA providers out there with their booth. So for us, we see that this is a big opportunity. And we recently raised over 150 million to not only invest in this space. We have two verticals. One is games and Ionic, and the other vertical is ed tech, so to say. And we also recently closed a deal in Turkey, or invested with a call option to a company called Mega Fortuna. So they're also in the rewarded space, and we think that there is a great opportunity, and we are focusing mainly on this area at the moment.
And again, and thank you for that. What about size, or what makes, let's say, a small to medium-sized studio attractive to a potential buyer? Todd, you had some pretty interesting thoughts on that.
Yeah, look, it's hard to get mind share, right? So and we all do the screens. Josh in the last presentation kind of alluded to the ones he does too. I think where you start to get kind of broader, on people's radar is when you're kind of in that 10 million of trailing, revenue with like a current run rate that kind of points to like a strong growth year ahead. So at least your forecast is also kind of quite credible based on the last few months. Like that's generally where you start to hit like everybody's filters that they're doing amongst the buyer group. I don't know if you guys see the same, but.
No, I think that's generally a pretty good threshold, and certainly gets people excited and interested. Let's kind of maybe just transition over to growth. We haven't really talked about that, but obviously all buyers in a saturated, mature market are going to be interested and kind of probably fixate on growth. What's in your pipeline? What new games do you have? How's the existing back catalog performing? And what are you doing in terms of operations to improve that back catalog? But where's the upside on new pipeline and new growth? So I'm just curious on, and Nick, you brought up the valuation topic of kind of, of course they've come down dramatically, but I think, certainly what we're seeing is that is really probably one of the most important drivers of valuation. So
it is, but at the same time, it's not as important as people think. A lot of companies, they're buying you for what you are now, and because growth is such a risk, great, we're going to double in size in 4 years. That's just a made-up number.
The trajectory, right? Let's say.
So it's great to show previous growth, but there's no guarantee of future growth. So I think part of the change this year is more based on where companies are now, rather than where they'll be in 2 years. When you're arguing about price, it's a price multiple based on this year's number, not a price multiple based on a number in 2 years. And I think a few years ago it was based on that number in 2 years. So people are maybe more realistic about growth, that it's not guaranteed. Yeah.
And maybe what growth segments do you see out there? Is it particular platforms, or sorry, Todd, you wanted to?
No, look, maybe one point that for Nick is I think people have to get more comfortable with structure, right? Like one way to bridge that, the unknown, will growth kind of repeat itself, is to kind of put your money where your mouth is, and look, as buyers, you're happy to pay a premium multiple if you actually achieve that forward view that you presented that showed the 50% growth case, right? Like Playtika, et cetera, you ask all those guys, they're happy to pay earnouts, right? That's a high class kind of problem to have. So I think the outsized outcome is there if you're willing to, kind of risk on around the deal.
Yeah. And then maybe just back, do you guys see any particular segments or niche subsectors within the industry that are growing? I mean, Caglar, obviously, you already pointed to how many rewarded, incentivized providers are out there, so clearly a growth area within the industry, but are there maybe particular platforms, particular business models, or areas that you see within the industry that some of the audience members might be interested in?
I think that maybe what is a little bit also happening with the transactions last year is that people are also more looking at, like, let's say the work for hire or the tech side as well. Like before, if it's all about, let's say you can say that games are like hit or miss, or I think people haven't said that in 10 years anymore, but they used to. So I think maybe also more stability is being found in businesses that are run differently than games, which are the tech businesses or work for hire businesses. So I think this is also something that is good for VCs, because I mean we at the early stage are also looking at a lot of tech, and some of that tech is going into obviously building games, but also a few of our portfolio companies, for instance, are also looking at other industries to use that same tech. So that would give them also more potential acquirers when they do mature and are at that stage.
And maybe what's also not that popular at the moment, like no one is talking about it that much, is this real money gaming. So right now it's not available on Android. It's not available on Android, only on iOS. And once this might be more relaxed, I think there's also a huge opportunity for further growth for these kind of companies. And I know we know Papaya and some other guys out there, so they are doing pretty well and only available on iOS. So I think there's also a huge opportunity.
Let's get into predictions, because I think that's what everybody here is probably thinking about. I certainly am. How do you guys feel 2025 will shake out? Do you guys think it will be similar to 2024? Do you think that, with maybe, Todd, you brought up, 3 large transactions, so maybe kind of a slew of, maybe a handful of some large transactions, and then, kind of more of the same, or do you expect an uplift, this year compared to last? And everybody I think everybody should answer that question. I'm curious to hear everybody's.
Okay. I'm consistent on this. I may be wrong, but I'm consistent. So for a year and a bit, I've been saying the middle of this year. The middle of this year is when a lot of market forces kind of come round. M&A's picked up because it's already picking up, which then trickles down to kind of earlier stage investment. So I'm hopeful, and there is, I am hopeful. It's not guaranteed, but I think the business market changes middle of the year when publishers realize they've killed all their games. And all of a sudden, they need games because otherwise they have to fire themselves, and nobody does that. And the VCs who are sitting on the money realize, shit, we've got to spend it, otherwise we've got to fire ourselves, and nobody does that. And the private, you can get the theme. At some point, people have to be active again. And I'm middle of this year.
Okay, that's interesting.
Look, I agree. I mean, like buyers for the last 2 years, they've kind of done everything, right? They've cut costs, clearly shed headcount. They've done share buybacks. They've done everything they could, like inward looking, and now it's it's time to find growth. And I think that's going to drive the M&A market. I think the financing environment's stable. Capital is available, whether it's the private lenders, whether it's the banks. I think the capital is there. So I agree. I think it's going to be higher deal volume and higher overall deal value in 2025.
And as I just mentioned in the beginning, since the valuations are getting more and more realistic, not only because of that, but that will be definitely a reason why more transactions will happen this year.
Well, I mean, I guess I need to disagree then, just to be interesting. But I mean, overall, I agree with you guys, but I also see that there's a lot of things that are causing almost like instability, a lot of things launching, a lot of new things happening. So like we don't really know until the end of the year really how these new things are going to affect the overall market. So I also think that people are going to be cautious and kind of like, let's see how that hits and then see if and what we want to do. So maybe I'll say fourth quarter just to be interesting.
If we all say it often enough, then we all believe. And if you say Q4, then you're killing. You know, a fairy died because you said Q4.
Fine, Q2 then.
I will add one point, and not to be controversial, but I don't know, and maybe some people in the audience have read Matthew Ball's 200-page, I can see a lot of people nodding here, right? So that was pretty insightful. I agreed with some of his points, and I strongly disagree with some of his other points. I felt it was a little bit, the tone was too negative. All these former gamers, or let's say fleeting gamers, whatever you want to call them, COVID gamers, are now spending their time getting fit, meditating, getting virtual pets or lifestyle apps or what have you. I mean, their dwell time, which was largely in games, has now transitioned over to other apps. How is that going to impact, the gaming industry? And again, I think some of his points in that deck were very interesting, and some of them I disagree with. I fundamentally think, again, on record, that I agree with you guys, but I'm just curious, playing devil's advocate, because according to his deck and his thought process, we're actually in for a pretty rough ride.
We debate this a lot internally. Like, there was this question, like, during COVID, did that represent just max consumer wallet and max, like, consumer time allocation to games relative to whatever else you love doing, working out or whatever it is, right? So, like, is that the high water mark? And I think you see a lot of forecasts that, after the couple-year decline, it's a pretty slow, almost slightly above, like, inflationary growth rate expected in games, right? It's still the largest category in entertainment. So I just kind of feel like the opportunity, especially for you guys, back to the innovation, it's there, like the dollars are there.
But even if you've got steady growth, within that, there's some sectors which are massively taking off, and there's some which are kind of steadily declining. So I think the disruption comes, and we've had it. I mean, I've been in games for 30 years. We've had so many different periods of disruption, and you didn't always see them coming. You didn't know which one was going to come out. You didn't know whether, a lot of people in this room, you didn't know whether Web3 was actually going to be able to deliver a great set of games that opened it up to a wider audience. You could argue they haven't managed to do that. But is it Discord gaming? Josh said it's not. All right, but actually we then had a little discussion in the back going, actually maybe there's elements of Discord gaming. And so there are opportunities, but it's not doing the business as it's been done for the last 20 years. It's focusing on community. Maybe it's mixed reality. I was literally in a meeting talking about mixed reality, and I was like, have you tried the Ray-Bans glasses? They're kind of cool. And he went, click. I'm like, owned. That was nice. So I think there are so many opportunities, but we've got to look at those opportunities. It's not just a blanket, let's carry on doing what we've done before.
I think if nobody else has any comments, I think we can open up to the audience. So any questions?
Hi everyone, thank you for the talk. Small question, what type of synergies do you expect to see on the market between an acquirer and a target next year?
It's really buyer specific. Like, I think if you talk about Playtika again as an example, right? Like, incredible, UA monetization expertise. I think they're kind of pretty open. Like, hey, your product relative to certain is not as much a strength historically, right? So, like, Moon Active, like, you could go by buyer, and each one kind of brings their own unique skill set through. But I think there's certainly, you talk about, like, centralized operations market, like, it's less of that. You got to find out, like, when you position your business, like, especially that, like, unmodeled upside, when you talk to a given buyer, you got to spend time thinking about what their core competences are and kind of play to the, play to the audience a little bit.
For me, it's definitely that the sum of the parts has to be greater than the parts. And I can't quite believe I have to say that. I mean, I'd spent 9 years at EA, so I really learned how not to acquire teams. But no, I mean, from a point of view, you're putting some companies together. They have to have enough benefits to make all the companies better. They have to add to the existing things and be better because of the knowledge that they're bringing in, or the reach, or the market, or the community, or something like that. And you have to have that clearly identified up front. But again, I can't believe I have to say that.
Well, I mean, sorry, that guy. Yeah. Sorry. I mean, I think we went through a frenzy, right?
Yeah.
And so people kind of lost track of, hey, let's create a strategic rationale. Why are we doing this? You know, let's understand from a seller perspective first, hey, why are we selling? Do we have a professional, do we have a certain goal and achievement and we feel we can accelerate much faster because we're lacking, as Todd mentioned, all of these internal functional areas of expertise, and guess what? These 5 buyers can satisfy that. And so I think if you're not doing that homework, you're not getting your strategic rationale or why you'd want to sell a business right from the get-go, then you're probably not going to have a great process or, desired outcome.
I mean, when you're looking at people who are selling companies like yourselves, it's very much, you're now trying to find the right fit for the company. It's not just, it's out there and everybody's bidding against it. It's like, actually, they make sense for this company because it fits with the other 5 things that they're doing.
But I think also in terms of like strategy is good and necessary and all of that, but like I would also say that I am hoping that everything also gets integrated properly, because like if you go ahead and you have like a really good acquisition strategy and everything, and then you acquire and then you just like kind of sit there with your hands in your pocket and everything just blows up, that's also not good for the market, not good for the deals, not good for anything really. So I think it's also the tactics behind it of like what is actually going to be done with that company and how is something that maybe has sometimes been overlooked.
Hi, so you were talking a lot about valuations coming down and that bringing in investors. I'd be curious about, do you have a take on the flip side of that, right? Like part of the reason valuations are coming down is that multiples in gaming are getting like quite low, concerning or potentially concerningly low, right? Like the MTG acquisition of Plarium, the revenue multiple there is pretty depressing, or you could argue that. And some of you are angel investors, other ones VCs. Does that concern you?
I'll hit the multiple one. I mean, I do think EBITDA matters. So like, the days of paying very full kind of revenue multiple, it's not a growth at all cost kind of market, M&A market environment. So there's a little bit of like a shift. Now that said, mobile, you're right. I mean, mobile trades, as depressed as probably it's been, I don't think that represents kind of like a steady state justifiable multiple. I just think the kind of the growth, IDFA, et cetera, it's just been a challenging couple of years, and until we find kind of some more, consistent quarters of growth across the key players, I think that'll rebound to kind of more normal levels.
I mean, I think always like what is normal? Like what are you comparing to? Are you comparing to when it was the absolute top, or like what are you comparing to? I think at the end of the day, also the market conditions themselves have changed a lot, especially on mobile. So in that sense, I think people are also just being cautious and trying to understand like how does it stabilize and what are the new models now? Like how are you going to do the things that you knew how to do before? So in that sense, then you're being more cautious with the valuations, and once that gets figured out, it will pop back a bit. But I'm from a VC standpoint, I'm hoping it's not going to pop back up to where it was, because that was a little bit crazy for us as well.
But I think also quickly, I know we have to stop, but Plarium's case is not really representative, because there is almost, as far as I know, not that much growth expected, so that was one of the reasons. So growth is still very important in giving multiples. So and in that case, it wasn't really there, just to put it in a relative.
I'll add just one very, you mentioned Plarium. So Easy Brain was done at double the multiple of Plarium, literally a week later. And what is fundamentally different about those two businesses, to Jallar's point? Growth. Right? So people will pay a healthy premium, a healthy multiple for businesses that can demonstrate consistent growth.